Remember when I was here last time and we were at 29,200 and I said to you, I'm not convinced that all the leverage is out of the system. And so I thought we're going to get another leg down. And so we got the other leg down. Here we are, 28,000. We actually were much lower. We're at 27,850. I checked the leverage earlier. There's still a lot of leverage in the system. Now, does that mean that we're going to get another leg down? Or does that mean that we've seen enough pain? And if we are going to get another leg down, how brutal is the other leg down going to be? When do we actually start buying? And what are we going to start buying? Are we going to ape into meme coins? Are we going to go into alts, or is it going to be Bitcoin? That's what we're going to be discussing today. It's a big show today. I've got a banter. I've got a banter with some of your favorite people. I've got 𝗷𝗿𝗶𝗆, I've got 𝗙𝗵𝗵𝗃, and I've got Melton back. And you'll remember the last time that Melton was on the show, this is what she said. It was almost prolific. So, I mean, just listen to this. I'm sitting with one of the investors that I respect the most in crypto, and she's telling me that the thing that she's buying is dog coins.
Hear me out. A lot of this stuff is not yet living up to the promise of like what's been articulated. The part we ignore is mimetic desire is the most powerful thing on planet Earth. We want things that appeal to us that other people have. And I think dog coins, hear me out, I'm going to sound crazy. Dog coins fill a really important part of this mimetic desire that we have as humans. When people start moving out on the risk curve, they start buying this mimetic stuff. So if we see people starting to buy dog coins and like these dog shit stuff again, really what that's telling us is people are feeling comfortable buying risk again.
I think what she meant to say was not dog coins. I think she meant I think she meant frog coins. But we'll talk to her as soon as we start the show. All right, guys, listen, get out of bed. Let's do this.
Get the fuck out of bed, bitch, go. Get up, and they got go. Time to wake up, bitch, get up. Get up, get up.
Listen, I know Melton's here, but you guys are going to start behaving yourselves in the chat. You can't be degenning on Melton before we even start the show, guys. All right, guys, listen, welcome back. Welcome back. It's not our regular studio, but I am here and I am bringing you crypto love and crypto wisdom today. And we've got a massive show today. We've got some of the biggest guests, I think, in the crypto world. We're going to be discussing a lot of things. We're going to be discussing PEPE, because I think it's very important that we actually discuss 𝗵𝗵𝗃 the frog and whether you should actually be buying 𝗵𝗵𝗃 the frog at a $90 million fully diluted market cap. We're going to be discussing Bitcoin and whether this Bitcoin dump is finished and whether it's safe to get your money into the market, or whether this was actually just I don't know what you're going to call it, a bear rally, a bull rally, and now we're going to start heading back down again. We're going to be discussing also the Bitcoin dominance chart, because look at Bitcoin dominance. You got the market coming down, and you got Bitcoin dominance actually coming down too, which means that people are getting a little bit more bullish around altcoins. And that's you can see the same thing on the ETH BTC chart. So if this is the ETH USD chart, but if you do look at the ETH BTC chart, you'll see exactly the same pattern. People are staying in altcoins. People aren't scared. And that's what makes me think that this is just a correction. So we're going to be discussing all of that today. It's going to be a huge Friday banter. But before we do some love to our sponsors, remember, our Friday banters are always brought to you by NordVPN. If you don't have a VPN, just go to the bottom of this video. As you can see, click on this NordVPN crypto banter link and protect your crypto. It's the only way that you can remain anonymous is by actually getting a VPN. So get yourselves a VPN. Why is it not accepting that link? Get yourselves a VPN, and that will help you guys surf anonymously. It helps you hide your IP address. And when you hide your IP address, you're basically masking from DeFi protocols and from centralized exchanges and from anyone who doesn't need to know where you are in the world. You're masking where you're at. And you're also protecting yourself from hackers. And I did say to you guys last time that Nord actually have a second product now. So if you have got a VPN already, you should get product. Okay, my links aren't opening here. There we go. So the second product that you should be looking at is getting this 𝗙𝗏𝗏𝗃 product. Now this 𝗙𝗏𝗏𝗃 product, I don't know if you know, but every time that there is a data breach and your data gets sold in the dark web, you start getting these spam mails, these spam SMSs and stuff like that. Now what 𝗙𝗏𝗏𝗃 does is it actually takes you off those databases. It proactively gets you off those databases. So yeah, sign up, support our sponsors. Also, before we start, remember we are running the trading competition. Starts on Wednesday. I see that 374 of you have already degened. We're doing this trading competition with Gareth Soloway. So the first prize is a Tesla. If there's no Tesla in your country or if it's too expensive, you get $40,000. Second prize is a ROLEX Submariner. And the third prize is $10,000 in cash. Plus today, we're going to be funding some accounts. And every day before the competition, we're going to be funding some accounts. So lots to talk about. It's going to be a massive show. If you're new to the channel, subscribe to the channel. If you are a veteran, if you've been here for a long time, well, just give us some love. Give us some love in the comments. Give us some love by smashing the like button. Anyway, let's get this show on the road. I've got our 3 guests with us. I got Raoul Paul. Raoul, welcome back, buddy. How are you?
Great, my friend. Good to see you. Always fun on a Friday.
We've got Melton with us with freshly cut flowers and a fresh haircut. Looking snazzy as always. Melton, welcome back.
Oh, I'm on mute. Nope, I'm not.
There we go.
Thanks for having me, Maren. It's good to be here with my spring tulips.
They look amazing. They look amazing. Your setup looks amazing. And then we got Dan. Dan, how are you, sir?
Good. Good. You got me out of bed. That little boogie thing in the beginning. You got me out of bed.
Get out of bed. We've got lots to talk about. So I think let's start off by talking about Maren Altman. Now, I know everybody fades Maren. I know, like, we all have these very, very, very technical ways of calling the market. Raoul particularly has very technical ways. He's got different types of charts, log charts, normal charts. He then overlays these big fundamentals on it. I've seen it. It's hours and hours and hours of video. And Raoul, look, all due respect, you're not as accurate as Maren, because listen to what she said. She tweeted this and she said, I advise caution during this eclipse of the 19th of April to the 5th of May for all the financial markets. Listen to what she said.
From April 19th until May 5th, we have eclipse season. And if you don't remember what happened last eclipse season in October, November, that was the whole FTX saga. And then the eclipse season before that in May of last year was Celsius and the fallout from that. So during this final eclipse season in this part of the zodiac of Taurus and Scorpio, I'm expecting some final contagion or some final loose ends to be tied up, specifically around FTX.
So she said April 19th. That was April 19th. I mean, it's pretty much the top of the cycle. Pretty much the top of the cycle. That was exactly April 19th. There we go. Not the first time she's called it. She called it here. She called it 17th of June 2022. Sorry, she called it before that. She called it 11th of May 2022, and that was just before Luna. And then she called it again here. Actually, she called FTX as well at some point. So we can't fade Maren with all our technical analysis and our fundamental analysis. What are your thoughts? Is there something here, guys?
She's the queen. I mean, she gets it right. I mean, who are we to argue?
Okay,
It's in the stars.
I want to say something maybe controversial. So I think in the last few years, there are a lot of people who've been getting really into astrology. There have also been, over the last sort of 5 years that I've been in sort of crypto, a lot of people getting really into technical analysis. So I think technical analysis is astrology for men. Hear me out. You're looking at, you're laughing. Lines and triangles on a chart. You're trying to sort of infer from this data what's going to happen. I think Maren is doing the same thing. She's just using different signs. And look, you showed about me earlier. Do you think the overall macro environment, and macro not just being macro finance, but the overall world environment has an impact on what's happening? So look, to me, technical analysis, lines and triangles, astrology, zodiac, they're a little bit similar. They're a bit esoteric. They're, you can say you have right calls if you're just constantly sort of backwards looking and trying to fit to the data. But I do think it's quite funny,
I don't know if it's funny. I mean, I also thought it was funny, but I can't fade her anymore because she's called it right. For me, it's 3 of 3. So it was Luna before Luna, and she called Luna for me. Just so you're clear, she called Luna for me at Solana breakpoint before Luna. So that was November before May. That's when she called it on our show. She then called FTX in November, and now she called this little cycle top. She also called the other cycle.
Rand, this is all for traditional market guys, old macro guys. It's all sort of normal. You know, trading the moon cycles is very common. There used to be a guy named Paul Montgomery who had a report called Universal Economics. And he wrote this report for 30 years, more. And he was the most respected, you know, I guess, moon watcher, etc. And it goes back to the old saying that JP Morgan had. JP Morgan said, millionaires don't have private astrologists, only billionaires do. And so that was something he said in 1912 or something. And there was a woman named Angeline Adams. And Angeline Adams was the one who helped JP Morgan navigate through, you know, the stars and et cetera, et cetera. So there's actually a lot of, it's not for here, but there's actually a lot of science behind it as well. So I would say ignore the full moons and new moons and all that at your peril if you're trading short term. So I don't really look at that stuff anymore, but there was a time when I did. So
it's a dirty secret of many people.
Yeah. So let's actually talk about where we actually are in the cycle. I mean, we can look at the moon cycle, but let's actually look at where we are in the cycle. We've had this Bitcoin bounce from what we think is the bottom, or certainly what I think was the bottom at 15,000. We're now like, we took a breather at 30,000. Walk me through where you guys think we're at. Rel, let's start with you. Where are we? Where are we?
I've mentioned many times, the whole crypto market is driven by two things: network adoption, which is the long-term trend, and then in the middle is the liquidity cycle. The liquidity cycle hit a bottom in June, and we started seeing the forward-looking indicators come up. And we've seen already the central bank balance sheet was led by China, Japan, and then the US. That liquidity cycle is in full flow now. So that should continue all the way through till 2025. And that's why we started Crypto Spring. It happens every time we get to this point. So forward looking, the liquidity cycle should continue. And the banking situation is one of the examples of how the liquidity cycle comes in. The Chinese continue with M2 growth, the use of the central bank balance sheet. The Japanese have obviously been using yield curve control. So for me, you know, we're in the right cycle now, and this should continue to play out. Now, within those, you get plenty of volatility. Usually you get 35% pullbacks are pretty common. Is this a 35% pullback we're in the middle of, or a shorter one? Don't know, don't really care. You know, I did all of my allocation. I haven't sold anything ever. I just bought more in June, October, and January, and just used that opportunity into the big sell-offs, and that's it.
But I mean, so are you saying that the fact that the US is threatening that they continue to tighten and interest rates continue to be increased, that's all offset by international liquidity on the one side, and then on the other side, Japan, China, and also you think that the US isn't actually tightening because of the banking collapse and everything else?
Yeah. So the tightening, it's not about interest rates; it's about liquidity. So the change in interest rates is a part of the liquidity cycle, but the central bank balance sheet is the predominant driver plus M2. There is about a 90% correlation between the price of crypto assets and a global liquidity index that we use, which is a function of the G5 central bank balance sheets plus the Fed balance sheet. Look at the G5 central bank balance sheets plus their M2. So look at the central bank balance sheet there with the Fed, and you saw that little spike, which was the injection of liquidity into the banking system, and all assets rose with that. And so, yeah, the interest rate rises are a red herring at this point.
Dan, what do you think?
Yeah, I mean, you know, Roland and I have somewhat of a similar background, and I would describe it that way. I think, you know, the low is in, and it was, I think, a bit obvious on the FTX fraud. I mean, on that announcement, which was probably the most shocking thing I think that our space could absorb, the Ethereum price didn't make a new low. So it's just typically called a bullish divergence. When you have the worst possible news that you can imagine and the price doesn't make a new low, it tells you the selling is over. So we actually deployed about $100 million into different companies between October and December. And so tapped out my third fund. Yeah, there were lots of discounts in the market, sort of uncontested rounds as well. You know, last year we passed on over 100 deals, and that was largely because there were so many where the valuations had been pumped up by outside private equity guys coming in to push the values to just crazy levels. Well, they're not there now. So we're able to dictate price in a way that we haven't before. So I think lots of opportunities ahead. I think we could get up to around 40,000, 3,000 ETH by the end of the year. I mean, I think it's a gentle bull phase is what I would call it, or consolidation around, we can be up two steps forward, one step back for the remainder of the year kind of thing. So,
Melton, what do you think? And specifically, I want to ask you, because last time you said to me that when people start aping into dog coins, that's a sign that retail money is starting to flow in. It's not really dog coins, it's frog coins, but it's the same thing. This time it's a frog, last time it was a dog. What do you think? Is this the sign you were looking for? You were asking for a sign. Did you get your sign?
No, not yet. And just to respond to something Dan said, if this is a gentle bull, I'm afraid to see what a fierce bull looks like. One of those face-ripping rallies that I think we all associate with this industry. Look, I think generally my view is unchanged. PEPE and this whole frog coin phenomenon, I'm not endorsing it in any way. I am not participating in it in any way. But I do think it's fascinating to see how much conversation it spurred and how much it shifted sentiment, even in some of the groups and communities I'm in. People got really excited. I'm seeing a lot of, oh, baby, we're back. I think generally people are feeling much more comfortable taking risk. And really, again, in what I said in the last show, this is really about people's comfort level with risk and how far they are on the risk curve. In Q4 and Q1, people were generally talking about getting more exposure to Bitcoin, getting more exposure to ETH. I would say these are sort of the equivalent of the low risk or risk-free assets of this space, right? They're sort of the liquidity sinks of the crypto space. Now people are talking about these long tail coins. People are trying to figure out, what do I want to have exposure to as we go into Q3, Q4? And again, we can't forget, we're going into another Bitcoin halving cycle. Now, again, history doesn't repeat, but it does rhyme. And I think if we just look at the pattern over the last 3 Bitcoin halvings, if we follow a similar pattern this time, we have a lot more data now about the history of crypto, its price behavior over time, its price behavior in these different supply-demand environments. And so I do think it's important to look at. I do think we'll see more money staying within the crypto space, looking to move further out on the risk curve as people see the opportunity to generate returns. So to me, PEPE is a great indicator that at least people within the crypto space are feeling more comfortable with risk, are getting more excited about these, little meme coins. And I think, again, when we start to see retail coming in, when we start to see people, getting back into the doggos, that for me, I'm watching the dogs. If the dogs run, we'll see running in other places as well.
So you said you don't endorse this run and you're not participating in this run. That's not like you. Like, you're a DJ, you're a crypto dick butts, you're NFTs, you're Doge. Why aren't you participating in this run? Why aren't you a frog person?
Okay, so this kind of goes back to the philosophy overall. I have a limited amount of time and I'm good at a limited number of things. I've historically been a venture investor. I've historically focused on sort of the venture part of the market. I don't have the time to be watching moves in these meme coins. They're very thinly traded on a very small number of venues and trying to time the market. I think for me, I am better off sticking to things that I know that I understand. So for me personally, it's just, I don't have the capacity. It's not in my wheelhouse. I'm not awake 24/7. We're doing a thing this year called sleeping. We're doing a thing called like being healthy and mentally balanced, or we're trying to. So I think for me, it's just, it moves very quickly. The swings are really dramatic. And also, I don't know anything about this. Typically, these meme coins, when they're created, someone owns 50-60% of the supply. They typically have an arrangement with the market slowly sell their large stake of this meme coin And so for me, it's not a game I want to play. I would rather play different games where I have an edge, right? So for me, I'm going to stick to playing games where I have an edge, whether that edge is a skill I have, a specific advantage I have, a specific advantage my firm has. That's what I'm going to play. And I just want to say, see the comments. I am not Maren Altman, by the way. I am 𝗏𝗏𝗃𝗃. Maren is
the astrologist.
ravishing astrology queen. I am silly meme Meltem. So very different people.
So I want to ask you guys talking about the 4-year, the halving cycle and the 4-year halving cycle. And at the same time, is it coincidental that the halving cycle corresponds to this new liquidity cycle? Because you're kind of getting both of them at the same time. Raoul, I see that you're nodding.
It's the same thing. It so happened that Bitcoin was launched exactly at the time that global interest rates went to zero. Everybody reset their entire interest rate and their entire debt burden at the same time. Everybody around the world. So every central bank, every country, every corporation, everybody reset rates at zero. It's created, and most of that debt is between 3 and 5 year debt. And what you've got is this 3.5 year cycle to 4 year cycle. And it's a global phenomena, and it was driven by interest rates being zero in 2009. And that is the Bitcoin halving cycle, because Bitcoin was launched exactly at that point as well. So the liquidity cycle is the predominant driver. Now, doesn't mean it's wrong to follow the Bitcoin halving cycle, because it happens to be the macro cycle as well. And that's all well and good. And if people understand it in those terms, that's fine. But it is actually the liquidity cycle that is global. And it is a complete structural change to the world that happened after 2008. That if you look at the ISM cycle, so the Institute of Supply Managers survey, it is exactly 3.5 year cycles. And we've never had this before. And it's just driven by the debt refi cycle globally.
Dan, what do you think? Coincidence or?
No, I think growth and inflation will come down every quarter for the rest of the year and maybe more. And I see the US 10-year below 2.5, and certainly the 2-year in the 3s. You know, the Fed can be stubborn, but the market is looking closely at the leading indicators. I think it's just never been a more clear liquidity cycle from the Fed. They over tightened and have made policy based on the headline CPI and the unemployment rate, the two most lagging indicators. I don't know, you could ask Raoul this, but I think it's one of the most obvious macro cycles in 30 years. So I just suspect that, but it'll be a drip of liquidity. It's not a whoosh like you had post-COVID. So that's why also the drip extends to the way that the Bitcoin is trading, or that I suspect the way it'll trade this year, this 2 steps forward, 1 step back. So I'll leave it there.
So you said it's going to be a drip. I mean, wow, okay. It's a drip. Doesn't sound very, very like a lot of fun, but I guess a drip in Bitcoin could make for a lot of fun in altcoins, right? Like
it's better this way because there'll be long periods of boredom, and it'll just shake a lot of people out. Adoption might be happening, as we call it, adoption sort of through a different method than we all have seen before. I mean, Melton talks about, the retail coming in, and I guess that's important to some degree. I think that, and I don't know if it's still considered a dirty word, this blockchain or blockchain technology, I used to think was kind of funny. But it does seem that many of the corporate entities from the old world are incorporating blockchain technology into their business models. I mean, Starbucks and Polygon is very obvious. The other day I read something about the California State Department of Motor Vehicles putting all licenses and car title deeds on the Tezos blockchain. So, to me, when you have non-economic agents like that, incorporating blockchain into their, business processes, I mean, that's pretty crazy adoption. It's just a different, a different path. And so the drip, drip, drip encourages those types of people to continue coming into the space. Stability is good. If we have a big whoosh of liquidity and Bitcoin goes up 10,000 in a day, all those type of people panic. So anyway, just a thought. Yeah.
Your mic, there's some interference coming from your mic every time you move or something. I don't know if you could just get your mic in a better place.
All right.
Melton, Raoul, I'm going to look at you guys. There's a lot of people that have been looking at this cycle and saying this is a Bitcoin only cycle. There's no altcoin run this time around. This is a Bitcoin only cycle. People have been celebrating on Twitter. They're saying that people are running to Bitcoin. They're not running to shitcoins. I've been following the Bitcoin dominance chart, which is here. I mean, it did again do what it does so beautifully at 48 or 49%, and what it's done every other cycle at 40, or for the last couple of months at 48 or 49%. Looks like it's coming down. You had ETH BTC turning around quite aggressively after the Shanghai upgrade. Raoul, I know that you watch ETH and ETH BTC because you're more interested in the network effects behind ETH and Bitcoin. Walk me through how you see this cycle.
Well, Melton's video earlier is everything you need to know. There is a risk curve, and people will move on the risk curve depending where you are. So when you're in crypto spring and there's uncertainty, you go to the safest, most secure, most known asset and the most liquid, which is Bitcoin. Then you tend to then spill out, and you see then Ethereum start to catch up. But as people become more confident in the cycle itself, you see it spread further out of the curve, and you're starting to see that already. I mean, Solana had a huge run this year. There's a few things that have had a huge run. It's not consistent yet. So it's very common that the Bitcoin dominance falls. It's the same in the credit market. People buy treasuries first, then they buy corporate credit, then they buy junk bonds, then they all blow up and we start all over again. I mean, it's a standard way that we operate. So it's very common. So crypto is no different than financial markets.
So you're saying that this...
But hold on, I want to add to that. So there's two things I want to add to that. Number one is, in crypto, we always say, oh, narrative drives price. And I think what Raoul is saying is actually, it's quite the opposite. Price drives narrative. And nowhere is that more true than in crypto. Price drives narrative. And I think a lot of what we're talking about is really an articulation of price driving narrative, which is why the online discussion is so important, which is why these forums, these conversations are really such a big driver. The other thing I want to say, to the point Dan made about adoption in terms of corporations, large businesses integrating quote unquote blockchain technology, I think it's very important to acknowledge that adoption does not lead to number go up. And I think that's a really important distinction that people do not understand. Adoption by larger players does not create, in many instances, a lot of demand for financial compute on these different blockchain networks. Again, what drives price is right now primarily speculation, because a lot of these networks are not really being utilized. There's so much capacity for compute and it's not being utilized. There's not a lot of demand for it. What you saw in Q4 of 2021, radically different. Every network was congested because of DeFi. There was a huge amount of demand for on-chain financial compute, massive transaction fees. As a result, we saw a lot of utilization on these networks. Now utilization is way down. If we look at utilization numbers, even though price is moving and we're seeing asset prices fluctuating all over the place, if we look at network utilization, if we look at actual usage numbers, if we look at how this on-chain compute is being used, it's not. And so I just want to make it clear so that people understand, just because a corporate or an entity is using the underlying chain doesn't mean that it will lead to material increases in demand for compute or lead to material appreciation in price. There can be great businesses built. And Dan, I know you invest in great businesses, typically through equity, right? And we'll see equity value in these businesses appreciate. But I think, again, it's very important, especially for people who love following you, Ran. I know they get really excited about investing in coins and getting exposure to the space through these underlying assets. Yeah. It's very important to just differentiate that adoption, may lead to actual dramatic changes in network activity, but it hasn't really been the case historically, and it's just an important thing to watch for.
Let me just say one thing, is that in my view, and I've always had this, is the mic better? Is that a little better or no? Okay, it's a little better. Okay. Well, is that the network effect is the driver of everything. And so to me, it doesn't matter who's coming in, what they're doing, are the number of digital wallets increasing? Is awareness increasing? So I understand there may not be a direct connect to compute, but you're bringing in millions and millions of people, at least conceptually, right? They're starting to understand how this ecosystem works. 3-4 years ago, at the end of the last bear phase, you didn't have that. I mean, last year you settled $8 trillion of value on stable coins, and that was a record. And that's at the same time that you had a 70% drop in the price. And so even though, let's say, usage of stable coins, let's say theoretically doesn't lead to a price increase in Bitcoin, the point is that you're bringing in millions and millions and millions of more people, and the net effect over time is that it does contribute to price.
And I did a lot of work on Metcalfe's law, network effects, and how to model it. And I found that really most of it is explained by two factors only. One is number of active addresses, and the other is the value exchanged on chain. So those two pretty much match price. So what Dan's saying is right, and what Melton's saying is right, is you need activity on chain. It's not just the active addresses. As long as they're doing stuff, the value of the network increases over time. But there needs to be activity. So, that is real.
Raoul, and I think Melton's with. I think she just switched off her camera for a second. But there are people that are saying that this Bitcoin dominance thing is going to continue to climb, and dominance is going to continue to go higher. I think I have a view that in 5 years the Bitcoin dominance is going to be 10%. I don't know, 20%. It's going to be almost, if you want to call it, like declining. Is that how you see the world, or do you see the world differently? Do you see any world where Bitcoin dominance can remain at 46, 47% for a period of 3, 4, 5 years?
It depends what demand there is for the Bitcoin blockchain. It's as simple as that. Right now, if you look at the number of different applications being built on Ethereum, you generally think that the network will likely grow faster over time than Bitcoin, but that can change. We've got ordinals, we've got other use cases for Bitcoin. We could see global central banks or sovereign wealth actors involved in Bitcoin. So it depends. I think likely Bitcoin dominance falls over time because of the lower number of use cases. But it's not something I worry about all day or think about.
Yeah. Melton, what do you think of Bitcoin dominance over time? Like, if we were to sit here and talk in 3 years, do you think Bitcoin dominance is like significantly under where it is today? And I'm talking to you like in the 20s and 30s. Well, I'm trying to get a feel for how important you think Bitcoin will be as a technology later on in the space when all the other technologies have evolved, like when we've got a faster Ethereum and a better Ethereum and a cheaper Ethereum, and you've got NFTs. Do you still think that Bitcoin is going to be this? I know there's always going to be an amazing space, but relative to the rest of the industry, how do you see the future of Bitcoin?
I think Bitcoin is foundationally critical to this space, and there's a multitude of reasons for that. Let's start first by talking about Bitcoin and how it derives its security as a network. Bitcoin's security is derived from proof of work, right? And I know there are a lot of critics, of proof of work. This perception that the utilization of energy and compute to create a medium for secure financial transactions has been highly criticized, but it is an incredibly valuable property of Bitcoin. It makes Bitcoin nearly impossible to attack. And that network security is incredibly important, particularly, I think, as we look at sort of the global geopolitical climate. We're moving from a sort of US as a hegemon world where the dollar has been dominant for many decades into a multilateral world, right? And we're starting to see this fracturing from a monetary perspective, right? If we look at some of the announcements that have come out just over the last few weeks about how people are changing the settlement currency for global oil and gas transactions, they're no longer just using dollars to settle these transactions, they're starting to use renminbi, they're starting to use euros, they're starting to use different currencies. So I think as we move into a multilateral currency world, the importance of the security and the neutral medium that Bitcoin provides for high value transactions that require security is incredibly important. Bitcoin is also apolitical, right? From a geopolitical perspective, Bitcoin miners are located in many different countries. There are all of these different checks and balances in Bitcoin that I think make it really important just from a geopolitical perspective as a medium for secure financial transactions. So that's number one. Number two, what I think is really important about Bitcoin is we could argue here that Bitcoin doesn't have as much technical innovation as other parts of the ecosystem. We could argue, Bitcoin use cases are more limited. But the one thing that Bitcoin does incredibly well, has done incredibly well for 13 years and continues to do incredibly well, is its core function, right? That is, Bitcoin has been up. It has had no issues with the chain. The chain has fidelity. The chain has permanence. This is something that is very difficult to replicate. And we're seeing this with a lot of networks that have been attacked, a lot of networks that are having trouble supporting the cost of compute, right? People can't run machines. People are not supporting these networks anymore from a computational perspective because the ROI simply isn't there. And so I think that permanence actually, and that predictability makes Bitcoin really foundationally important.
But
so I continue to be enthusiastic. Now, when it comes to creating wealth, right? And I think a lot of people who invest in crypto are interested in not only the technology and sort of the ideas, but they want to make money. And I am fully respect that. If you want to make a lot of money in crypto, buying Bitcoin is probably not the way to do that. And that goes back to people moving further out on the risk curve, looking for these bigger opportunities. But I do think if you want to preserve your crypto wealth, or if you want to, allocate a part of your portfolio to something that has permanence, is more stable, Bitcoin plays a very foundational role there.
Brilliant answer. Were you surprised by the response to ETH Shanghai upgrade and the ability to withdraw ETH? Were any of you surprised at the market reaction? The market went up. Do you think, which seems to have to insinuate that the market had priced this in? What we saw, we did see some drops or some withdrawals of ETH. A lot of these were forced withdrawals. One of them was Kraken, because they had to shut down their staking operation. You can kind of see that there was another dip, and now we're kind of, it looks like maybe not selling as aggressively. I won't say we've turned the corner yet. Were you guys surprised at this?
No, I mean, what you've done with ETH is you've created a money market curve of what is, a reasonably complete digital economy. And the money market curve now allows people to stake at will, reduce some risk in the system. There's no real reason why people at the early stage of a cycle are going to take their ETH out. They will do at some point and put it into other stuff as they go out the risk curve, or go down the risk curve and go back to Bitcoin. But I think it's a very sensible thing. And actually, it's setting up for something I think a little more complex that I've got my eye on. Is we've got an issue that staking is going to rise in ETH because it's got a good yield. It's reasonably understandable. So it gives us some sort of risk-free rate within the space. The issue is you've also got the ETH burning, and you end up with a very limited supply of ETH in a bull market. Now, I understand that that as the cost of compute goes up, what you end up with is less burning over time. But there is an issue that you could end up with a very squeezy market, and it could be a problem for ETH, actually.
You say the ETH staking reward is high, but right now you can get 4%, as Dan was saying, you can get 4% for just putting your money into a government T-bill.
Yeah, but you're choosing, it's a currency, right? So you are investing in a currency. You've made the choice, like you live in South Africa, you will try and hold non-South African currency. You get different yields, right? So if you've chosen to live in Web3 world, okay, here you've got an asset that has a high quality asset that has a decent enough yield. It compares to traditional yields. We're not asking it to have more because it's got a much different risk reward profile than the US dollar or US treasuries.
Yes.
But it's a way, if you want to park capital in the space passively and still participate, you get a yield, much like if you went to US dollars, you might put it into the US bond market and try and get a yield from that. There's no difference.
Dan, what do you think? You surprised by the market's reaction to Shanghai and with the number of withdrawals?
No, I think, these obvious events are always anticipated by the market. And so not really surprised. I mean, it's just the same as how the markets trade in and out of the halvings. So I think that information that, as I said, data that's well known in advance gets priced in early. So
yeah. Melton, what do you think now that Shanghai is behind us? Walk me through the ETH thesis. What's next for Ethereum?
Yeah, so I think it's always really important to understand sort of who's participating in the market. If we look at Ethereum staking pre-Shanghai, I think a lot of the larger stakers were large holders of ETH who were fundamentally long ETH, either because they hold it in their treasury, it's being used as collateral, it's part of their fund. There are also numerous people who are early in the ETH ecosystem who have a lot of ETH. And so a lot of the people who are staking are people who have no real impetus to unstake because they're not necessarily looking to arbitrage. They are directionally and fundamentally long ETH anyways. So for them, the incentive to unstake isn't necessarily there because they're not looking to trade around the event. The other thing we can't ignore is the Ethereum market is now much more sophisticated than it was even a few years ago, 3 years ago, because of the depth of the derivatives market. So in 2018, 2019, the Ethereum derivatives market was not very, very deep. There weren't a lot of places where you could trade perps, options, futures, etc. Now you have a lot more venues to do that. On some days, Ethereum derivatives activity even outpaces Bitcoin derivatives activity. So that allows people to also hedge around these events and create market neutral strategies that allow them to, be fundamentally long, but at the same time, take an offsetting short position to kind of net it out. So I think these are some fundamental just drivers to be aware of is number one, who are the market participants and sort of what is their focus? And number two, what is the market landscape? And the Ethereum market landscape's changed a lot. The last thing I think is looking forward at what's going to happen with Ethereum. I do think Ethereum has sort of won the battle for smart contracts. I do think all of the L2 activity on top of Ethereum is incredibly compelling, incredibly interesting. I also will say, I think 2 days ago, I paid, $50 for an Ethereum transaction. So it definitely felt reminiscent of where we were maybe a couple of years ago. Not great.
Competing with meme coins, that's why. You were competing
very
with
indicative, right? But I do think one of the challenging things Ethereum has facing it is MEV and block building generally. The nature of the network in a post-Shanghai world, and particularly with, flashbots and some of the products they're rolling out that allow for MEV extraction, and now also proposer builder separation, which means you have a separate group of people who build and assemble blocks, and then a separate group of people who actually mine blocks through this like MEV boost mechanism. So that PBS coupled with MEV, I think fundamentally like creates opportunities for centralization. And then that coupled with Ethereum staking, where there are probably a small handful of entities who own, a significant portion of the ETH supply, and whether they're all the same entity or whether they're groups of people who are sort of all aligned, I think it creates some interesting questions around power and the future of the Ethereum network. So these are just some things to consider. But I definitely think MEV, PS, these are two things very important to watch.
Melton, what do you think of the risk of there's two big staking pools? That kind of worries me, right?
Yeah.
Lido and Rocket Pool, just the whole market.
I mean, I think pre-Shanghai was maybe more worrying because you had this locking mechanism. Post-Shanghai, maybe less concerning.
You get a duration mismatch then.
Exactly. And I will say, sort of to take the other side of that, there were also some similar concerns around Bitcoin and Bitcoin mining pools, right? There are a handful of mining pools that have large concentration, but people forget you can reallocate your miners to any pool. I recently switched from F2 to Luxor. It was a click of a button, right? And I've reassigned my miner. So I think it's an argument certainly that could be leveled against ETH. What I will say is I think this industry is incredibly innovative. I think anytime we've had sort of issues and challenges, for example, with staking, right? What happened? Liquid staking derivatives, boom, that problem got ameliorated, not fully solved. But I do think as concentration in Ethereum starts to build, we will see market solutions that attempt to at least address or ameliorate some of those concerns. Whether they can ever be fully removed, don't know. And this is, again, where I still think it's so incredibly important to have Bitcoin due to its proof of work mechanism. Proof of stake, incredibly valuable, but also proof of work, I think, is sort of that fundamental building block that I go back to.
One of you said it, I don't know if it was Raoul or Melton, but one of you said that ETH has won the smart contract with ETH Shanghai upgrade. ETH won the smart contract battle. Does that mean that your investment thesis is not to look at the other smart contract platforms? Or do you think that there's still a world where we need a whole lot of other smart contract platforms? Who was the one? Was it Melton?
I made that comment. So what I'll quickly say on that is, again, it depends on what your objectives are as an investor. If you are, and what your duration is, right? Raoul brought up the great point of duration. If you're a short-term investor and you want to make money, right? There are opportunities in new and emerging platforms where price drives narrative, right? Not narrative driving price. Price drives narrative. Price action drives interest. And so in the short term, there are these really outsized opportunities to generate alpha, right? Market beating return. If you are a longer duration investor, a lot of venture investors are like this, you perhaps are holding for a longer period of time, then it might make sense to choose just a small handful of platforms that you think offer something unique. I think we will always have coins that sort of trade and will always have this very speculative sort of online casino part of the market. But I do think controversial few over the next decade or two will really start to see aggregation and network effects build around a small number of consensus mechanisms and a small number of networks that achieve this critical scale from a computation perspective. And so I think it's very important to sort of pick your horse carefully. And if you want to speculate, by all means speculate. But I do think that when it comes to just the complexity of the space, there's only going to be a handful of dominant blockchain networks, and those networks will have the most security, the most compute, the most network activity, and all of these other sort of adoption metrics that we look at.
Dan, what do you think?
It could mean 10, that could mean 20. I mean, we just don't know. It's so early. Only two have really achieved network effect, in my view. And I think the other ones are really more venture projects. But it's a very creative, furtive environment. And I think Melton's right. I mean, it's a little Wild Westy, but that's fantastic because it's the creative, juices flowing, and let the best, strongest, smartest community survive. I always say it's the only true free market that's left in the world is this whole digital asset ecosystem.
Well, what do you think? You degened. You started to degen towards the end of last year. You started going into Solana. You were going into, I think, you were looking for network effects.
I generally hold a basket out the risk curve, and it's kind of very weighted towards ETH. Have a bit of Bitcoin, but then I will look for what I think gets network effects, and I think Solana has some potential of provable network effects. As Dan said, it's still kind of at the VC stage, but I see a lot of activity on chain. I see a lot of developer activity. I see a lot of wallet addresses, etc. So, I hold stuff, including Doge, because, Doge is a really interesting one to me. And the reason being,
I can't believe it.
Well, there's a thesis, Dan.
Hands up.
The thesis is,
honestly, I can't believe it. That is all the way out the risk curve into the land of the mimetic ether. I mean,
hands up. I mean, hands up. Am I the only one holding Doge?
No, I've got Doge.
Are you not holding Doge?
Listen, I don't have time in the day. I'm with Melton. I've got so much going on. It's hard to.
No, and the reason I've done it, and I've held it for ages, and it's a tiny position, is it has, if you think of the Metcalfe's law model, it has a lot of active addresses. What it doesn't have is any use case. Now, all it requires is one
use case,
which is Elon. If Elon uses it for Twitter, you have network effects very fast. So I'm like, I'll take that option. Why not? And, because as Melton points out, a meme is a use case as well.
Yeah.
Culture is a use case.
I know Melton needs to leave in a few seconds. I just want to get Melton's views on the US environment right now. We saw Gary Gensler of Congress last week. to me, it looked like he was embarrassed. I don't know how you guys feel about what happened with him and in front
record of failures to protect investors and abuses of power make it clear that we need to restructure the Securities and Exchange Commission. The failures are many, but let me cite some of the abuses. You average more than 2 rules proposals a month. You provide inappropriately short comment periods. You have unworkable and unlawful ESG disclosure mandates on the market. You have essentially a Hotel California rule for crypto where you can check in anytime you like, but you can never leave. You have endless
discovery
with no resolution and no clarity for the captives in the market.
So I think we all heard this. We all watched this week. And at the same week, we also got Brian Armstrong saying that, or saying that Coinbase has got a Bahamas license and they're going to start operating an offshore exchange. Walk me through the US environment at the moment. How does this play out, Melton, before you go?
Sure. I'll offer my limited perspective. I spent a little bit of time in DC, and I think I learned it is not for me. So while the testimony, I believe it was on Tuesday, was dramatic, and these hearings, I think, are always a little bit of a dog and pony show. I think to understand the environment, basically every representative in the Financial Services Committee gets 5 minutes. They can use that 5 minutes to make their own statements, or they can use 5 minutes to interview the witness, which in this case was Gary Gensler. Most of these people are trying to get sound bites in. So I love Warren Davidson. I think he got a lot of great sound bites in. Tom Emmer, shout out to him. He got a lot of great sound bites in. Does this actually lead to any change?
That's the question.
No. If I were a betting woman, which I probably will bet on this somewhere at some point, because that's how we do it. I think the odds of anything happening here are less than 1%. And again, what we've seen, like these institutions that we have in the United States of America, the systemic issues, these things are fundamentally broken, but they're so large and they have so much mass behind them. So if you think about physics, right, an object with a lot of mass that is traveling in a certain direction has path dependence. It's very hard to move it off that path. And I sort of feel like the US environment is very much this right now. We have like this massive bloated federal government, and it is on this trajectory, and it does not know how to change course. It just has it doesn't have the capacity, doesn't have the ability, it doesn't have the resources. It does fundamentally just does not have the ability to move off of this fucked up trajectory. And that is so sad. The question is, will crypto gather enough mass, or something else, right? Gather enough mass to sort of jolt it out of this trajectory? Possibly. But I think just the trajectory US institutions are on, it's an unworkable solution. So will anything happen? No. How does the SEC get reformed? No idea. Dan and Raul have been in markets much longer than I have, so perhaps they have a very different perspective. But I have to tell you, I am not encouraged by what I've seen, and I just think it's going to be something.
I was just going to say, Ran, hasn't it already moved away? I mean, I think it's 85% of the total volume, total trading volume is done outside the US. Binance is a big chunk of that. You already have, places like Dubai, Abu Dhabi, encouraging crypto businesses, to set up shop there. Hong Kong is now, changed course. I was just outside of the country for a month, and it's incredible, like the positive reception that I get, and also crypto, blockchain, Bitcoin, however you want to call it. Places even like Australia, where they do understand currency. I think in America, currency sometimes is difficult to understand, and they have this gold background, and so they understand store of value. So it does seem to me that it's already happening, this sort of shift. And then just you get Armstrong's comments the other day that he'd consider moving outside the US. It's a very serious thing. I mean, it's the largest and really the only public crypto blockchain business in the world that's public. And so, yeah.
And Dan, you and I saw this in our career when we both were in the career. London was the center.
Yeah.
All the banks were in London. Goldman Sachs, yes, it's a US company, but its main office was London. You would be in London all the time, this little island in the middle of the North Sea. But we all ended up there because the US was restrictive on its ability for people to do stuff. So the hedge fund industry, the derivative industry, the FX industry, the Eurodollar industry, all the biggest industries in finance were all in London. And it seems like London's in with a chance here as well, which is serious because Coinbase can easily move to London.
Also recently that in the next 6 to 9 months, and I've heard whispers too about that, you know, behind the scenes that they are serious about, you know, providing a reasonable regulatory framework. And I think in one of your pieces you mentioned, you know, this regulatory arbitrage that London seems to be in the habit of doing. So it's certainly very possible that the business, the industry, the focal point shifts to another, shifts to London. It's possible.
But can crypto succeed without US participation?
It's not a lack of participation. It's the lack of industry being focused there. So if you think what happened to the derivative market, the Eurodollar market, the FX market, everybody participates, but because of US regulations, they don't do it in the US. So even US pension funds had offices in London to be able to use certain elements. The hedge fund industry just went to London. US retail investors will still get access to the market. You just can't build serious businesses there. So they just get built elsewhere, and that's fine.
Sounds like a tragedy for me. I mean, specifically.
Yeah, me too. I don't think it's fine for the US. I think, you know, there's so much talent. It just moves away from what we all think of as an American tradition, you know, which is capitalism and free markets. It's a shame in a way, but, you know, I've been saying this quite a bit recently. You know, when you have a government run by 80-year-olds, they're not necessarily looking at future technology, innovation. It's really more about the entrenched interests. And that, of course, long term is no good for your economy or your culture.
Yeah. Listen, guys, on that note, I think we should leave it for today. I think we are running out of time. So much love to you guys. Much love to Melton, who left us. Dan, I'm going to buy you a new mic. That's my let me know when
Is it that bad? Oh, no.
Go back and listen to it. We need to sort out for next time. Raul, it's always amazing to see you. So much love from the Banter.
All right, guys. Take care. Good to see you.
So much. And to the fam, stay online. Lots to talk about. I do want to quickly look at the leverage. So remember I said to you, I was worried about the leverage not being flashed out, and therefore we may need to get another leg down. Let's quickly go and look at all the leverage matrix. So the leverage matrices. So for the first thing is, we know we had the biggest leverage flash out of the year so far. That's one thing. The one thing that I am looking at is I'm looking at the Binance open interest, because when you look at the Binance Perpetuals open interest, now for those guys who want to do this, let me show you guys how to do it so that you can see it, so that you can see the Binance open interest yourself. So you go to TradingView, you go to BTC USDT.P. P means perpetuals. And then you go to, you look for, we're going to look at Binance over here. And then what you do is you go to indicators and you go to, what is it? Open interest. So you look at the open interest. And that shows you, that'll bring in the Binance open interest. Now, what you can see is that the leverage did come down from this 121 level where it built up to, went all the way down to the 92, and it's starting to creep up again. So the leverage hasn't been completely flashed out according to this indicator. Here's another indicator here, which is a GMX open interest. You can get this at stats.gmx.io, and you can see that there's still a whole lot of longs. There's still a whole lot of leverage longs in the market. So on these metrics, it looks like there's still another leverage flash out that needs to happen. So watch out for the leverage flash out. Watch out. Someone says my mic also sucks. Let me try and go a bit higher. Yeah, I am traveling, as you can see, so I don't have my actual mic with me. So that's the leverage. Right now, there's still leverage, which means that we could get another leg down. I would put my money on maybe another leg down before we start buying, and that's why what I'm going to do is over this weekend, I'm going to make a video for you guys. Go onto my Twitter, because I'm going to make a video for you guys on what I'm looking to buy and what prices I'm looking to buy at. So I look at the bubbles. There are a whole lot of tokens that potentially are worth buying, but I'm not going to get in until we get to a certain point. And I want to talk to you guys about what those, which ones they are. Like, for example, Radix. Radix might not be such a bad buy. There is a level at which I'd buy it, but it's not 9 cents. it's lower than 9 cents. Let's talk about what that level is. Same thing with render. I have enough render, but if render starts coming down, one thing I am seeing is that the tokens that went up the quickest are coming down the quickest, which is obvious, but those are the ones that will probably go up again the quickest. And I think that we are just in a leverage flush out. And therefore, I think these tokens that are coming down, we need to find levels at which we're comfortable to buy them, and then we need to start buying them. So this is what we need to do. I'll make a video for you guys on the weekend to try and do that. Lastly, again, remember to support our sponsors, NordVPN. I can't support them because where I am, you can't get onto a VPN. Can you believe that? That's one of the things. There is a link over here, $3 a month to protect your crypto. Also, you can sign up to the other products, their Incogni and their threat protection product, which are also very good. Bybit Trading Competition. Bybit Trading Competition. We are limiting this trading competition to 2,000 people. We have 384 people now. The competition starts on Wednesday. First prize is a Tesla. Second prize, a Rolex Submariner. Third prize, $10,000. Plus, we're going to be funding accounts. I'll fund the accounts on the weekend because I don't want this show to run too late. Lastly, most importantly, we are going to be in Miami for Bitcoin 2023. We want you to join us there. You can buy the highest discounted tickets using this link to get there. When you buy these tickets, you also get a free ticket to the Banter meetup, which is happening there as well. And you can bring a friend to the Banter meetup. So what you need to do, sign up using this link, get yourself a ticket to the Bitcoin Miami. It is the cheapest ticket that you can get. I think it's like $800. Do it. That'll also give you entry to the banter party. I'm going to be there. Sheldon's going to be there. Fred's going to be there. Carl's going to be there. Miles is going to be there. Hustle's going to be there. Everybody's there. And we're going to have a big party there. So sign up, get a ticket. That ticket will give you tickets to the after party, the banter party as well, which nobody else is giving you. You support the station, you support the channel. It'll be amazing. If you want your account funded, go and sign up. We're going to take a list of the signups. I'll show you the type of list we get just so that you can see. Let me just quickly see if I can open the list. So for example, I think it's this list over here. Let's have a look. Hold on, just want to make sure I got the right list here. So you see, so we get a list of all the people that have entered the competition. Remember, anyone can enter the competition, but only people that have signed up with a banter link can win the prizes. So you can play for fun if you want. You see that I don't want to do it now because I don't have everybody here because there's 283 on my list. As you can see, there's 386 here. So it's unfair to fund accounts here. But you know what the hell? Let's fund some people's accounts just for fun because we're here. So if you are, I can see this person is Spanish, so amazing. If you are 633-04751, I'm funding your account in the competition. And if you are, no, we can't do two Spaniards. Let's do an African. Here we go. If you are account number 273-19018, I'm funding your account in the competition. I'm going to fund in total 100 accounts. So I'm going to fund in total 100 accounts. How do you get funded? Into the competition. Put $250 in your account. Get ready because on Wednesday we trade. All right, chaps. Listen, been amazing to see you. We'll see you guys again on the weekend. Until then, have fun and trade well, my friends.